How's it going, everybody? It's Stas here. So in this video, we're going to be breaking down some stocks I'm looking at right now. We'll quickly look at the markets as well, and I also want to report on some banking earnings that just came out this morning, and we're going to break down the CPI projected numbers, and later on in this video, once the CPI numbers actually come out, since I'm filming this in the morning, we're going to go over what those numbers are looking like. So sit back, relax, take a sip of your coffee, go down below, get $50 from M1 Finance. Literally all you have to do is use my link, deposit $100, and we each get $50 to invest with. You could also get 2 stocks from Webull up to $1,600, and you guys could check out my Patreon if you want to keep up with all my moves in the stock market. And again, all of those are linked down below. And with that being said, let's get right into the video. So the reason why I'm filming this in the morning, and you guys are obviously watching this at night, and you're probably wondering, Stas, what the heck are you doing? Well, I'm going on vacation. I'm going to be gone for 10, 11 days, and don't worry, I'm still going to be making content, uploading videos, being active in the Patreon. All of that is still going to remain the same, but today I'm traveling, so I can't make a video later, so this is why I'm filming it this morning. So let's talk about what is going on right now. SPY is currently consolidating, nothing crazy. It's kind of like the calm before the storm in a sense, because in 8 minutes from now, the CPI number is going to release, and I guarantee you when we loop back to SPY in about 10 minutes, this thing's going to be going crazy. So as of now, we're consolidating. QQQ is probably doing the same. Actually, look, it's rising a bit, but over the past 2 hours, it's been consolidating. So we ran up in the first 2 hours of pre-market from 362 to about 364. Now we've been consolidating. Let me pull up this 20-day chart. It looks like, yep, we hit an all-time high on QQQ today in the pre-market. So nothing too crazy. We have gold up 0.5%, which is pretty crazy. Gold's up above 1,800. Silver's up 0.3%. The VIX is down 0.75%. And yeah, it's kind of like the calm before the storm, guys. So what are the CPI estimates? So you guys know last month was abysmal, right? The consumer price index for urban consumers, all urban consumers, increased 5% from May 2020 to May 2021. And the June consumer price index is expected to show a 5%, pretty much equal, similar to what we saw last month, year-over-year gain, matching that May level, like I just said, which was the highest gain since August of 2008. And you guys remember what was going on in August of 2008. It was not a pretty time in the economy and the markets, and it was just an ugly time period, right? So we'll loop back here in a couple of minutes to see exactly what the CPI numbers were. We'll break down some categories, but overall, it's not looking great. There's a lot of inflation, and in my opinion, there's even more inflation than what is being noted here. Because look, the CPI number, sure, it takes account into normal consumer goods, a basket of goods, but it doesn't include many things, such as real estate increases in terms of prices, rents as well. It doesn't include stocks, which a lot of inflation has been in the stock market, in the real estate market, which is why you're noticing how, and the saying always goes, the rich get richer, the poor get poorer. Well, it's an unflattering reality, let's be honest, because when there's money printing, what happens? Asset prices go up, and who owns assets, right? Who owns stocks, real estate? People that are in the upper middle class, the wealthier people in the world. And who doesn't own assets and real estate, stocks, and other assets? Poorer people, people that don't make that much money. It's the unflattering reality, and when there's inflation, that's pushing up asset prices, making rich people richer, and it's increasing consumer prices, meaning poorer people, I don't want to just make fun of that. That's not the point of this, but it's just reality. Poor people, they have to spend more of their dollars to attain the consumer items that they need, meaning less money's going in their pockets to live their life, pay their bills, and do whatever they need to do to live life. So that is why rich get richer, poor get poorer. That's not just some political slogan or something that people just say that sounds cool. It's reality. It's the sad reality. And again, we'll loop back here in a couple minutes to see what those CPI numbers are looking like. I want to see what the used car sales numbers, I really want to see that. So we're going to tune into that. And now let's quickly talk about bank stocks. They just reported this morning, and Goldman Sachs, guys, holy crap. Goldman Sachs did very well. They did EPS of $15.02 versus $10.23 estimated. Revenue came in at $15.39 billion versus $12.17 billion estimated, and they boosted their dividend by 60%. And I was thinking to myself when I was making notes for this video, did they cut their dividend? I believe the banks, I could be completely wrong on this, but I think the banks maybe cut their dividends a little bit. Maybe now they're reinstating some of those because a 60% increase is pretty massive. I mean, that's huge, guys. So maybe they're bringing back the dividend. I'm not sure. I could be completely wrong, but that's just an idea I'm having here. So Goldman Sachs is doing very well. They did very well in Q2, and now they're up about 12 cents. I mean, nothing crazy, but overall, we're noticing a green candle, 2 green candlesticks here on the 4-hour chart pre-market. So I feel like this is, I mean, it could collapse under 375 again, but I feel like this is in a new range. I think it's going to go up to the 390s, potentially 395 even. It might break that recent high from the beginning of June. So that's kind of what I'm watching now on Goldman Sachs. I mean, we've mentioned before the not inverse head and shoulder, the head and shoulder here, and the fact that we broke the neckline yesterday, which is a great sign that the head and shoulder is we're seeing a breakout from it, right? So at this point, again, look for a move towards 390 on Goldman Sachs. JP Morgan also just reported. They did EPS of $3.78 versus $3.20 estimated. Revenue came in at $31.39 billion versus $29.96 billion estimated. So they beat EPS, beat revenue. Not as crazy as a beat as Goldman Sachs, but still, they beat EPS, they beat revenue, and I'm not sure if they increased their dividend. That could be a bank-wide thing right now, that they're pushing their dividends back up. Let's take a look here. I'm not really seeing anything, but it says here, wow, JP Morgan Chase gross investment banking revenue, $1.2 billion, up 37% year over year. That is pretty insane. Fixed income down 44%. Let's take a look. Dividend, I don't see anything about the dividend, but overall, look, this one's trading under the, not the 50, but the 180 SMA. It's trading above the 50 SMA, and it's actually down about $1.40 here in the pre-market. So I'm not looking to touch JP Morgan. And like I said, guys, I'm traveling today, so I'm going to be trading on the go. I mean, I already have some, orders in. And the beautiful thing about today's day and age, guys, is you can trade on the go. Wherever you have your iPhone, I have a 5G connection, a hotspot. I can just link my computer onto the hotspot and boom, I'm going to be trading at the airport, and I'm going to be working, guys, on this trip. That's just me. I can't go on a vacation without working. It's just not possible. After a day or two, I'm sitting there and I'm like, all right, what's the market doing? That's just me. That's just me, guys. But hey, to each their own, right? And I'm going to be watching JP Morgan. I'm going to put my alert at $160, and I'm going to see if it breaks out of here. If it does, maybe we fill the gap towards 167. I feel like this could be a double bottom breakout, but we're obviously not breaking out yet, which is why I have my alert at 160. Pepsi also reported this morning. They did pretty well. The stock's up. Wow, it's up a lot. Jeez. Well, not a lot in terms of 20% like we see with some stocks, but for Pepsi, it's up a lot. It's up about 2% in the pre-market, which is kind of sad to me that I'm saying that's a lot, but it's all relative, compared or considering or what's the word here? It's relative in terms of the stocks you're looking at. So Pepsi, a 3% move is huge, but for Apple, that might not be big. Or for Neo, 2% is a daily swing. So yeah, for Pepsi, 2-3%, that's a pretty big move here. Excuse me, guys. And they did EPS of $1.72 versus $1.53 estimated. Revenue came in at $19.22 billion versus $17.96 billion estimated. So they beat EPS, they beat revenue, and I believe that was an all-time high that we just hit. We're trading above the moving averages. We've been seeing a golden cross here on the 4-hour chart, so that is awesome. Let's see, is that an all-time high? It's got to be, right? Let's double check that, guys. Let's go on the 3-year chart. Yeah, it is an all-time high. And now that we broke above 148 in general, the ascending triangle is playing out like we called out a couple weeks ago. It took some time, guys. You know, Pepsi's not the quickest mover, but now that we're breaking out of the ascending triangle, it's playing out here. We're squeezing up. There could be more upside in the short term on this thing. So we're going to be watching Pepsi. XLE is another one I'm looking at. This is an oil ETF. And now, okay, look, the markets are moving down. You guys see that big dump in the futures? That means the CPI number just came out. Let me just pop that up quickly. You guys can see on the intraday, the algorithms are kicking in here. Look at that. Oh, that's ugly. Look at that massive drop right there. My computer's actually freezing a little bit right now. What the heck? That means a lot of movements going on right now, guys. So, yeah, S&P futures are down 0.3%. We'll loop back around there in a second. But first, XLE. You guys, again, you can see this is an oil ETF. And this is one that, in my opinion, and by the way, full disclosure, and you guys on my Patreon know this, I've been buying into this. I've been averaging in as a longer-term position. You guys can see the uptrend's holding. We're currently down about $4 from the high. We're down about 7%, and we're trading under the moving averages, so keep that in mind. We're seeing a bearish cross, the 50s crossing under the 180 SMA here, but I believe if we start breaking out of the low point from, I believe, in the end of June at about 53 bucks, if we take that level out and we start creeping above the moving averages as well, this could end up being a breakout play. Let me show you guys the downwards channel that I'm personally seeing right now on XLE. You guys see what I just drew there? If this breaks, guys, right, this 53 level, we're going to fill up to 55 in my opinion, and then potentially break out of 55. That is definitely possible. And now I'm itching to look at these CPI numbers. I might just jump to the CPI numbers quickly, guys. Then we'll wrap back around to the last 3 stocks that I have here. So bear with me. I'm going to change on my OBS here. We're going to go to the government website here, and let's do a quick refresh. Let's see what ended up happening. So CPI for all items rises 0.9% in June as many indexes increase. Now I want to show you guys the PDF. I love looking at this PDF here. This shows us everything when it comes to the different categories. So mind you, this is the first time I'm looking at this live, so you guys know you got to bear with me for a second. So okay, look at that. Used trucks and cars. Did I not mention earlier in this video? That's what I wanted to see. Used cars and trucks increased by 10% in June. That is unbelievable. That makes me want to sell my car, guys. I bought a 2016 Toyota Corolla, full disclosure. That is what I drive. I bought that about 2 years ago, and now I'm tempted to just get rid of that. Take the cash and maybe upgrade to a nicer car with this crazy inflation. And by the way, Toyota Corollas, not that they're nice, not nice cars, but let's be honest, it's not as nice as a Tesla. It's not as nice as a Lexus or something like that. But it's a very reliable car, and the gas mileage on it, it's super cheap. But overall, used cars and trucks up 10% in June. It was 7% in May. It was 10% in April. So we got a drop in from April to May, back up in June, and the unadjusted 12 months ended June 2021 is 45. Holy crap, guys, 45%. This is unreal. So what else do we have here? All items 0.9%. That's unadjusted at 5.4%. So is that worse than the 5% estimated? It might be. Food is up 0.8% from 0.4% in May. That's rough. Food at home 0.8%. Food away from home 0.7%. All of these numbers look to be higher from the previous month. This is not good, guys. Energy 1.5%, which comes out to a 24.5% annualized number. Let's take a look here. Energy commodities 2.6% in June. What other numbers are standing out here? We have commodities, less food and energy. We have all items, less food and energy. That's 0.9%. Utility, gas service, 1.7%. Jeez, guys, all of these numbers, for the most part, I mean, apparel's down. Apparel was 1.2% increase in May. It's 0.7 in June. But all of these numbers seem to be above what was last month. So maybe that's why the market is cratering right now. That's a quick look at what we're seeing here. Maybe that's why the market is taking a huge dump. It looks like the CPI number was worse than expected. And just look at this graph. The 1 month percent change in CPI for all urban consumers, seasonally adjusted from June 2020 to June 2021. Look at that increase. Holy crap, guys. From June 2020 to June 2021, we're up almost double. We're noticing, especially from October 2020 to where we are now, the steady increase in this. May was a little drop, so maybe people thought, oh, inflation, it's dying down a bit. And then June came around and smacked May in the face and was like, nope, we're back. Inflation is back. So, yeah, 5.4% increase. The index rose, the all items index rose 5.4% for the 12 months ending in June. It has been uptrending every month since January, so this is it's not a good look. Let's go back and see what the markets are doing. Bear with me here, guys. Let me go to my OBS, go to ThinkOrSwim. Let me just make my face a little bit bigger. There we go. So the markets are down, and I wouldn't be surprised necessarily if we just sold off, then at market open we ended up spiking. I mean, we've seen that before as the market does digest this, and we can see the initial drop kicked in. And now we're consolidating and we're moving up slightly over the past couple of minutes. So we'll wrap back around here at the end of the video after we talk about some more stocks. Number one here, there's 3 remaining, like I said. The first one out of the 3 is Tattooed Chef, ticker symbol TTCF. This one has been in a funk the past couple of weeks, ever since the beginning of June. It hit $23 when it went down to $18. Now we're back to about $20. So we've been in this wedge for a couple of weeks now. And that's interesting because we got word that, I think that was yesterday, that Tattooed Chef is set to launch its branded products across multiple categories in about 1,800 Kroger stores throughout the U.S. later this summer. And that's crazy. 1,800 stores, guys, and a total of 12 SKUs will be rolled out nationally. Some of the SKUs include the plant-based vegetable pizza, which I haven't tried, cauliflower mac and cheese, which I have tried. I really like that. And it's not the healthiest thing. I mean, there's a lot of cheese in it, but if you're looking for a veggie option, there's cauliflower in that. It's pretty good. I'm not going to lie. It is pretty good for mac and cheese alternative. Veggie hemp bowl, I haven't tried that. The Mexican style street corn, I have tried that. I'm obsessed with that stuff, guys. And the chow mein, they're also looking to do that. And a bunch of other ones. Obviously, there's 12 SKUs. I just named off like 4 or 5. I believe they're doing the plant-based burrito bowl, the enchilada bowl, which both of those are my favorites. Those are really good. I like Mexican food a lot, guys. I'm not going to lie. I'm Greek. I love Greek food. I love Italian food. But Mexican food, it might be my favorite, or it's up there. It's up there in my top 3, no doubt about it. I mean, I was in Mexico 2 years ago, and I was eating like a pig out there. I'm going to be honest with you guys. But overall, I'm looking to see what Tattooed Chef does here. It's currently trading under the moving averages. I'd love to see a break out of this resistance point for a rally above that, obviously, for a breakout. Coca-Cola is another one I'm looking at here, which I believe is going to open up as a nice swing trade if we break out of $55, hence my alert at $55 per share. I believe if we end up taking this level out, and by the way, this could be a head and shoulder as well, so be careful. But if we take out that 55 level, the neckline in the potential head and shoulder forming will break, meaning that we'll fill the gap up towards 56.50, maybe 57, giving it about 2 to 3% upside from where it is right now. So we're going to be looking for a move on Coca-Cola and Alibaba. Full disclosure, guys, I'm in Alibaba. I traded it last week. I hopped in and out. You guys in my Patreon know that. Again, you get all my real-time moves. Literally, once I buy, I put an alert there. Once I sell, I put an alert there. I day traded, or was it a day trade? I think it was a day trade, or maybe it was an overnight trade. Again, you guys on Patreon know. I forget because I trade a lot. But overall, Alibaba is one that I hopped in and out of last week, and I've been buying it this week as a long-term investment. I've been buying some long-term shares yesterday, and I'm going to be buying more today. When you're watching this, I already bought more shares, so I'm going to be building this out for a long-term position. And overall, when we're looking at the trend, it's obvious that the trend is still down, but in the short term, now pre-market, we are up, gapping up, and we're moving above 209.210, which was that low point from the 6th of July, which is a great sign. And now we're moving above the moving averages as well on the 10-day chart. So I feel like this could be the start of the reversal, which is why I'm actually flooding money into this as a long-term play, because the higher the stock gets, the risk goes up, the P goes up, the valuation goes up, and I want to build in a larger position in this. Not too crazy, but about 5% of my portfolio. You know, I'm adding this in my M1 account. I'm adding this in my private account as well. So I like it, and if it gets back into the 190 somehow, which is still possible, I'm going to be adding way more to it. So overall, guys, that is it. Let's wrap back around to the markets. It looks like the S&P futures are moving up a bit higher, so they're digesting that CPI number, climbing back up. We'll see how today goes. Obviously, if you're watching this video, the market played out. Let me know in the comments what ended up happening. I'd love to know what you guys did. And if you guys found value in the video, smash the like button, subscribe, turn on that notification bell, and check out my Patreon. If you guys want all my real-time buys, sells, call-outs, morning update videos, if you're in the top tier, I literally do a morning video every single day, and I'll be doing those even on vacation, guys. So make sure to tune in to that Patreon. Go down below or go to stocksurfest.com/Patreon and sign up. And you guys could check out the Webull link, the M1 Finance link. You literally get 2 stocks up to $1,600 from Webull with a $100 deposit, and you get $50 guaranteed from M1 Finance with a $100 deposit. So get your free money. That's linked down below. I'll catch you all in the next video. Thanks for tuning in again. As always, keep crushing the markets. Stay safe out there, guys. Peace out.